We are going to do our market update. We do this market update every 2 weeks, just to keep everyone appraised of what's going on in the Calgary real estate market in Alberta. It's what we're going to go over today is some numbers that came up. I'm just going to move something on the screen here that came up in RBC's monthly housing update. They compare cities across Canada, and you can look at the numbers here and see how resale housing is dropping across most places in Canada. You can see in the bigger centers like Toronto, Montreal, Vancouver, 30, 40, 50% drop in the number of sales. Calgary, however, while we're seeing that drop at 40.6%, Edmonton 26.4% drop, Ottawa 35.3%. What we really want to zero in on is it's going to move something in, the MLS home price index, and that tells you the year-over-year price change. It would be February of this year, or that would be January of this year as compared to January of 2022. And if you look at the price drops, every major city in Canada is seeing a drop except Calgary.
Yeah, Calgary is the only one who's leading, and there's a reason. Tim, and the reason is people are moving here. It's as simple as that, and there's no inventory. So everything that's coming on the market right now is getting snapped up. We have currently 2,700 listings on the market. Out of that 2,700, 700 of those are pending. So there's only 2,000, I know the exact number, 2,032 listings right now. And out of those 2,000, there's about 800 condos. They could be townhouses or apartments. And so if you're looking for a single family home out of the whole city, there's only 1,200 houses to choose from today. And we can tell you, as we said, we just went to see a property in Bennington, and they're asking a premium amount for this property, no garage, fully renovated, half duplex, 2 bedrooms up, 2 bedrooms down. They're asking $425 for it, and it will probably sell for about $450,000 with no garage. So the half duplex sector, the townhouse sector, the condo market, it's going to continue to go up. And the main reason being is because interest rates went up, everybody's affordability has dropped. Okay, so they've dropped down into 450 or 500 and below, the majority of buyers out there. So that's why that sector of the market is continuing.
Yeah, and you don't only have investors competing for properties like Azad's talking about, a suite and half duplex. You've got regular homeowners also coming into that market. We're competing with people who now need that basement suite as a mortgage helper because they've been shut out of the higher price ranges. And in these, good revenue producing price ranges, we're competing with homeowners. So there's a lot more competition amongst the buyers. And what we really need to do is do our homework and make sure that our investors are paying the right price and that they're not overpaying for something that'll blow their numbers out of the water.
Yeah, and one other factor with this is that there's no rental properties. So people can't even find places to rent. Rents are going through the roof. So when you look at the affordability on just renting, you may as well buy if you're buying under the 450,000 range, because the rental amount is going to be the same as your mortgage, taxes, and insurance on that property. And what we're also seeing, Tim was in a property the other day, and we're seeing bigger families looking to buy suited properties because then they've got a mortgage helper. So then that's going to be in such a demand as well.
I was in a suited, it was actually a duplex. It was a front back duplex on Edmonton Trail. So the front unit was on top of the double garage, and the back unit had a basement suite underneath. So there were 3 suites in this property. It's fairly unique, but that's the way they were building them back in the 50s and 60s in neighborhoods like Tuxedo and Winston Heights. And while I was in there with our clients, there were probably 50 other people in the house or the units looking at it. And there were many, many multi-generational families in there. So people would move in and they would have the grandparent live downstairs, and then they would have, the brother-in-law with his kids live in the other unit. So all of these people, this intergenerational family, make it quite a bit cheaper for the average family because they're all sharing one mortgage payment. So that's another thing that our investors are competing against, these big intergenerational families. So it's something to look out for, and it's something that we're going to run into until we see some supply increase.
Yeah, so to wrap up our crude market update, We don't see this slowing down anytime soon. Everything that's coming on the market on a daily basis is being chewed up, it's being sold. So we're not growing in inventory. So this is going to continue for some time.
Yeah. Moving on, Danielle DeMarco, our mortgage specialist, she is at a conference out of town this week, so she's not able to participate. But the first step in buying a rental property is to contact a mortgage broker, preferably someone with investment experience. Danielle is our go-to mortgage broker. There's her contact info. So if you don't own any reference properties or you want to see where you are financially right now, and if you can buy another one, by all means, send Danielle an email. She will start the process going and she can figure out, what your next move is.
Yeah, definitely first step. We had someone call us today, Greta called us today on a sixplex that came up in Parkdale. Is it Parkdale? Yeah, and the first step before going to look at a property as an investor, I know we all get excited, we all want to jump out there, but when you get to like a sixplex, Tim, it turns into a commercial loan, and Greta knew this, but the amount of cash that you need on a property like that is 35% generally, and to raise that sometimes takes time. So we need to stress that you should be working with a mortgage broker. We've worked with Danielle for something like close to 20 years, I think 18 years or something like that. She definitely knows what she's doing. So feel free to reach out to her.